All right. Okay, so welcome to the Indonesia Project Global Web Seminar Series on COVID-19 in Indonesia. My name is Arianto Patunru, and I'm hosting this seminar with Nur Kamala Mulyani and Baskara Adiwena. We are thankful to the support from ANU and DFET. Today, we will discuss about the financial aspects of policies in response to the pandemic. We are very grateful to have Bapak Suahasil Nazara, the Vice Minister of Finance, Republic of Indonesia, and also an economics professor at Universitas Indonesia. He will inform us about the government's response in terms of social protection policies and relief financing, all in terms of the National Economic Recovery Program. We are also very thankful to have Dr. Peter McCawley, a visiting professor at the ANU and a long-time observer of Indonesian economic development. He will offer his observation of international aid coordination in the fight against the pandemic. I also would like to thank two of my dear colleagues at the Ministry of Finance who joined Pak Suahasil. They are Dr. Fabio Kacaribu, the head of BKF, Fiscal Policy Office, and Ibu Masita Kristalin, special staff to the Minister of Finance. Pak Sua just sent us a message that he is still in a meeting with OJK. So we will start with Pak Peter. Peter McCawley will kick off the seminar. So without further ado, let me invite Pak Peter. Silakan Pak.
Baiklah, terima kasih Pak Cho. Hello to everyone. Ini selamat siang dari Canberra, and selamat pagi to all of you in Jakarta. Now I'll just try this share. Now I have been asked to talk about some international aspects of the situation, so I will be mainly focusing on international considerations, but of course there is some overlap with the domestic situation. So I'll try my share screen now, and I have to find, here we are, I think this is the one, and I hope that comes up. Pak Acho, is that okay? Can you?
Yeah, it's good, Pak. Yeah.
Good. Okay, bagus kalau begitu. Okay, well, perhaps the most outstanding characteristic across the globe at present is that the current crisis is marked by a lack of internationalism, lack of international cooperation, both globally, and this is of course reflected in that externally there is little support coming from overseas for Indonesia. This might or might not be a good thing, I don't know, but there you are, it's just a situation. An example of this, of course, is the much publicized announcement by US President Trump that he's going to withdraw from the World Health Organization. Apakah jadi atau tidak, whether that happens or not, we will have to wait and see. I think it might require approval from Congress, and that might not be forthcoming, but anyway, we'll see. There's also a very low level of bilateral discussions. This is reflected in the OECD, the DAC, the Development Assistance Committee. They put out a press release a couple of weeks ago, and the press release is marked by the fact that it is a very weak press release from the Development Assistance Committee. But I would note that donors are slow, and maybe, mudah-mudahan, when we look ahead, maybe 6 months later, maybe there will be a global response. And in this context, there's a little bit of history from Indonesia. Indonesia, of course, had a great change in government in 1965, and throughout 1966 and 67, the international community considered assistance for Indonesia, and it was slow, really, to get going. It's interesting that the international support for Indonesia only really became strong in the middle of 1968, more than 2 years after the transition, really, the crisis. And this occurred when McNamara, who had become president of the World Bank, visited Indonesia. And the precedent here is that for this international support for Indonesia to get going, needed strong support from a strong leader. This was McNamara, who had been former Minister for Defense, who had an international agency behind him, and then they mobilized international support. So looking ahead, maybe 6 months or a year, we need some international leadership, which of course that's a problem as well. But for the time being, at least, in any case, for Indonesia, the current crisis is a new crisis. It's the first time in 50 years that Indonesia has to go it alone. So several things to notice about this. The trend towards what has been called in Indonesia ketergantungan, that is dependence, has been underway for quite a long time. When one digs back into the history, there was actually a very good report from Bappenas around about 2005. And so this discussion, this is not in a sense new. The trend does reflect various factors. One reason is that it's not always easy to work with the international community. The international community always sets conditionality. There were difficulties during the Asian financial crisis, and there were also difficulties during the tsunami aid program. You might recall that a joke at the time was that Aceh, the province of Aceh, suffered two disasters. One was the original tsunami, and the second was the disaster of all of the foreign assistance coming in, causing all sorts of trouble. But a third point to note is that international support for Indonesia is not zero. There is some multilateral support, although not a lot. There was an ADB loan of 1 billion. There was a World Bank loan of 250 million. And hopefully, of course, and this might be the most important international support, hopefully Indonesia will benefit from new technology. That is the new technology of a vaccine when and if it becomes available. What about some economic implications? Looking overseas, there are some economic implications. Indonesia will need to borrow overseas to maintain access to resources. And Indonesia's debt service ratio can be expected to rise markedly. This occurred back in 1965, and I'll just jump forward one page to show this, and we'll come back to this page. This is what happened in Indonesia in the late 1990s. So we've been through a sudden jump in Indonesia's debt service ratio. This is Indonesia's total debt as a proportion of gross national income, that's very close to GDP, was sitting at about 60% through the 1990s, and this was seen as a comfortable level. And then in the malapetaka of 97 and 98 in the Asian financial crisis, debt jumped very markedly from 60% to over 100%, 140%. At the time, it seemed unbelievable and it seemed a terrible burden. Well, we can see that over time, it was possible to get it down. And I'll just go back, the debt, one can always reduce debt. Debt can increase, but it can be reduced as well, and it has been reduced in many countries. And there are really 4 ways of reducing debt, and Indonesia may need to consider these. One, of course, which is not really desirable, is to renege, to refuse to pay the debt. And this, actually, Indonesia did do some of this during the Pertamina crisis in 75, 76, when, looking at the books, the government decided that some of the debt was unreasonable. A second way of getting the debt down is to allow inflation to occur and to really inflate the debt away. This is not necessarily desirable, but this has also happened in Indonesia with Russian debt after 1967. The Russian government did not join the international IGI arrangements, but its debt was involved in them, and over time, Russian debt in effect disappeared. A third way of getting out of debt, and this is one of the best ways, of course, is to grow. And that is what happened after the Asian financial crisis. If the growth of the economy is faster than the growth of debt, then the debt service ratio will fall. And then finally, one can pay the debt. This is the most, I guess, the most direct way of doing it. But for Indonesia to repay the debt, and this is what happened after the Asian financial crisis, there has to be cuts in government spending in other parts of the budget to allow for increased interest rate payments and debt payments, and also an increase in taxes. In the case of Indonesia, C and D, they were what you might call the Budiono approach between 2001 and 2004 with the support of Ibu Mega, President Mega. Now, these are all difficult options. They are costs. There are costs to the present crisis. There is no such thing as a free lunch, and Indonesia will need to consider these over time. Now, there's the graph. Moving forward, there are only 2 other related issues that I'll mention before turning over to Pak Sua or others or discussion. The first is that Indonesia will continue to need access to international finance. So let's just look at a couple of those. First, Indonesia still does need large amounts of capital. The level of capital per person in Indonesia still remains very low. In fact, it remains low all over developing Asia. And the whole of developing Asia needs, if possible, to import capital. Now, there are sometimes some doubts about this in Indonesia, but I'd simply like to say that as an Australian, I can recommend importing capital. Australia has been a capital importing nation for 200 years or more. We've got a long-term deficit on our current account of about 3%, and Australia has been borrowing for 200 years or more. So countries can borrow provided they use the capital well. Useful sources of capital for Indonesia to consider are first multilateral development banks, that's the World Bank, ADB, AIIB, the New Development Bank and the Islamic Development Bank. There's a range of national development banks in Japan, China and Korea. There are quite a few of them, and there are reasonable amounts of finance available from them. And Indonesia itself can issue bonds to the world market. But there is a catch here. In fact, Indonesia, of course, has been issuing bonds. But there's a catch here, and these are international borrowing costs. This is a diagram showing countries down the left-hand side. At the top, there's the United States, United Kingdom, Japan, and I've shown the zero mark. You can see that in countries like Japan and Germany, interest rates are negative. You can see across a range of other countries towards the bottom of the diagram, interest rates, international interest rates are in the range of 0 to 3%, 4%, something like that. But Indonesia is quite high, up at 6%. So the borrowing costs for Indonesia are quite high at present. Now, there are probably specific reasons for this, and it may be that some of the other figures other countries don't give us a good guide. It's not obvious, for example, why borrowing costs for Indonesia should be higher than for the Philippines, for example, or for Vietnam. But this relates to specific circumstances in bond markets. Now, the second aspect that needs attention is Asian regionalism. There has been a great deal of talk in Asia about regionalism for many years, and regionalism is an important goal. Progress has been made, but a lot more progress is needed. Regionalism across Asia is quite weak. What we need to note looking forward is that Asian countries really need to do this themselves. There's little support and sometimes even opposition from outside the region, and there have been instances of where efforts have been made to expand regionalism, and it has been opposed by other international governments. The steps needed are to expand regionalism, a commitment to openness. There's a lot of talk at present about globalization winding back. This could be a huge threat to growth in Asia if globalization winds back. One of the key aspects that has underpinned growth in Asia for many years is openness. There was a wonderful report, a very good report by the World Bank in, I think it was about 2008, called the Growth Commission. And Pak Budiono was a member of the commission, by the way. It's a report that I recommend, the Growth Commission, and one of its strongest messages was that openness is very important. And not just in trade, openness in trade, but also in capital flows, in ideas, in technology, in labor flows, if possible. The whole emphasis is on a wide idea of openness. Second is a stronger ASEAN. ASEAN still needs to become a good deal stronger. Finance will be needed. ASEAN is underfinanced, and it will need Indonesian support as well. Indonesia is really a very strong player in ASEAN. The third step needed is to strengthen existing institutions, such as regional banks, other institutions, and think tanks. We need to have a better network of think tanks across the region. And finally, this is something that looking further ahead, is to consider something like an Asian OECD, which the OECD really exchanges a lot of information in many areas. It's a think tank that gathers information about fiscal policy, about agriculture, about manufacturing, it's about labor markets. It shares a lot of information, and we need better sharing of information across the region. This could be done through existing institutions, or a new institution could be set up. At one stage, a number of years ago, Japan was looking at the possibility of establishing something like an Asian OECD. But it could be, we could get the same functions within some existing institution as well. So saya kira cukup sekian, terima kasih. I've been speaking for 13 minutes, 13 minutes sudah cukup saya kira. Jadi over to you Pak Acho. Silakan ya.
Thank you so much, Pak Peter. That's very comprehensive. Let me check if Pak Wakil Menteri is here already.
I'm here, Pak Jo.
Oh, Pak Sua is here. Thank you so much, Pak Suahasil Nazara. So, ladies and gentlemen, we are very grateful once again to have Vice Minister of Finance here with us to talk about Indonesian response to COVID-19 in terms of financing. And we are very looking forward to what he's going to tell us about these policies. So, silakan Pak Sua. Thank you so much.
Thank you very much, Pak Acho, and Pak Peter. Thank you very much as well for your presentation. First of all, let me apologize for coming in late to this web seminar. I'm in the middle of another meeting. It's still on. I promised them that after 30 minutes, I will be back to that meeting. In that, for that purpose, with me this morning is. I'm accompanied by the two prominent persons from Ministry of Finance. Number one is my replacement at the Fiscal Policy Office, Pak Febrio Kacaribu, who I think most of you also know him from his previous role in University of Indonesia, Faculty of Economics. And I hope that BKF will continue to have a very strong relationship with ANU and also Australian community for many years to come. And number two is Ibu Masita Kristalin. I think she is one of the proud alumni of ANU as well. So I'm bringing her back to the seminar by the Australian National University. Let me, number two, I also would like to apologize by coming in late. I talked after Pak Peter. Pak Peter discussed, I look at your slides, Pak Peter, and then I try to fit in. I think your presentation fits in well. It should have been after what the government of Indonesia is trying to do to fight this COVID pandemic. But nevertheless, let me just mention our understanding about this COVID-19 pandemic. I would like to go directly to slide number 5. Our understanding about the pandemic is that it is a health issue. It's a health issue. So it's starting with the spread of this coronavirus. It's becoming a health crisis. In several countries, it started much earlier compared to Indonesia. The first case of Indonesia was found in March the 2nd, several months, a couple of months after the China. But the way we are looking at the way to fight this health crisis is by social distancing. It is important that we reduce the social interaction, the social distancing, and that affect the economy. When it comes, it's affecting the economy. It is our concern that the economic performance will be slowing down, consumption will be disrupted, investment will be hampered, export and imports will stop, and economic growth will just slow down. This problem, if we do not handle it properly, will becoming a financial crisis. It will trigger financial crisis. These are the steps that we do have to stop. We have to find measures so that health crisis not becoming economic crisis, and to the great extent possible not becoming a financial crisis. And if we look at the what happens with the economy, if we go directly to slide number 7, we know that the global PMI is going down very sharply, and Indonesia is not an exception. Indonesia's GDP, we used to grow at around 5%, and then in the first quarter we dropped to 3%, 2.97%, 3.0%. And we expect that in 2020 we will be around 0 to 1% economic growth in 2020, and in 2021 IMF said it will be 8%. Our own estimate would be around 4 to 5% growth next year. The volatility increased, then I think the economic slowdown is happening in almost every countries in the world. What is the economic policy responses in handling this problem? Australia basically is a fiscal stimulus. Fiscal stimulus is increased. Australia increased around 10% of the GDP. Malaysia around 10.5% of the GDP. US, next slide please, tolong yang operasi ini bisa ngikutin. US is quite high. Basically US has no, US with their own system, it's they can print as much money as they want. Germany is around 18%. Singapore is staggeringly at around 19%, and also South Korea. In Indonesia, the economy is affected very severely. If the first quarter impact is 2.97% growth, we think that the second quarter it will be much lower. Please slide number 10. And the second quarter would be much lower. 2.97% was happening after the social distancing in March, and it's not the whole March. It's basically 2 or 3 weeks in March only. But the growth go down to 3%. Now in the second quarter, we spend April and May the whole social distancing, especially for Jakarta and parts of mostly Java and parts of other Indonesia. But we all know that Java is 60% of the Indonesian economy, basically. So it will be quite deep for Indonesia. This is what we have to anticipate. And that's why our estimate for the economic growth for 2020, it's between, next slide, minus 0.4% to 2.3%. But right now, if smaller range is around 0 to 1%. And the socio-economic impact will be severe. Poverty will increase in terms of numbers of people. These are our estimates, and unemployment will also be increasing by that number. Of course, during this time, we have low inflation, but this is not something that we would like to celebrate. It's demand is weakening. On the other hand, if you look at the exchange rate is very, very weak around March. If you look at that is the 3rd week of March, we were under pressure. And then after that, the rupiah is strengthening, but it is also combined with the weakening US dollar recently. So this is something quite a swing. And if it is too much of a swing, it's become volatility, and it will not also be good for the whole economy. The IDX, the index harga, stock market is back to around 5,000 after we had, in the 3rd week of March, we were also under pressure because of and then after that, the foreign money start to come in, and it's gradually our stock market is improving. Now, what is the government reading about what kind of policy response, and then what kind of recovery that we are about to go? Clearly, it's a health problem that is decreasing the confidence and lowering the global demand, lowering the commodity prices. It's a crisis, it's a virus that impedes mobility of people and goods. Real sector is affected, and this is something that we understand that we have to upgrade our health sector. We have to change the way we do the budget. We implement the budget, we have to change that. And we need flexibility in running the government budget. And because of that, since early March, we start to think about how the budget should be flexible enough to respond for the situation, for the real sector and financial sector situation. That's why the first move by the government is issuing the Perpu number 1, 2020. Perpu number 1, 2020 provides flexibility to the government in changing the budget, changing the postures of the budget, and also providing the financial sector a better and regulatory environment for the stability. In terms of the policy, fiscal policy, there are rounds of stimulus that we designed. If you look at the first stimulus was back in February, when Indonesia has still had no case of coronavirus. We were only observing what happens in Wuhan, the lockdown in Wuhan, and then all the way until the Chinese New Year, so the Imlek. So we start to think that in February we have to put in stimulus, because starting early February, the incoming tourists from China was basically stopped. So we think that if the incoming tourists is stopped, then we will encourage people to move around Indonesia. And that is the stimulus one. But soon enough, we think that that is not enough. And maybe after we decided to conduct the PSBB, the social distancing, basically we cannot encourage tourism. So that comes the stimulus number 2, which is more like a fiscal stimulus, tax breaks, and some policies in the financial sector, and that is March. But by the end of March, when the Perpu was announced, we think that we have to change the way we implement the budget, and we put in a stimulus number 3, which is 405 trillion Indonesian rupiah to rescue the national health and the economy, and maintaining the stability of the financial sector, and expanding the deficit to 5.07% of the GDP. So that is the stimulus number 3. But after, I have to tell you that when we put in the stimulus number 3, when we put in the new numbers for the budget, we think that we have to upgrade the health sector. We have to provide the upgrade for the hospital, ventilators, tests, COVID tests. We have to make sure that 132 hospitals around Indonesia are ready to take incoming patient. And we put that 75 trillion Indonesian rupiah. So that is in the stimulus number 3. And then after that, we also decided that we have to upgrade the social protection. We have to upgrade because the people will start to, their income will start to cease and will stop. And we have to come up with a serious social protection. So that series of logic start to come in, including the support for the business sectors, especially the small medium enterprises. So that's why we put in a number that is somewhat becoming a magic number quoted by many, 150 trillion Indonesian rupiah. But and all in all, they are the 405.1 trillion Indonesian rupiah. However, after that, we continue our deliberations. We look at the many different segments of the economy, and then they, as people understand, the needs for the funding increased. So please go to the slide 17. So this is our somewhat final numbers for the funding for the COVID-19. 686.2 trillion Indonesian rupiah. In the slide number 17, please. Health increased to around 87.5 trillion rupiah. Social protection, this is expanding the conditional cash transfer, basic food, social assistance for the Jabodetabek, non-Jabodetabek area. Pak Aco, is your slide changing? Because it's not changing in my... Can we go to slide number 17, please?
Not, I think it is operated from your...
Yeah, it's operated by...
Yeah, it is not changing. It's still on page 15.
That's why it's not changing.
Yeah.
Can we change to the slide number 17? In the slide number 17, it's basically what it says is health is 87.5 trillion Indonesian rupiah. Social protection, 203. Slide number 17. Social protection is 203 trillion rupiah. Incentive for the business sectors, this is in forms of many different tax breaks, VAT, income tax, corporate IT, and so on. It's 120 trillion. Support for the micro, small enterprises, around 123. And all in all, it's becoming 686.2 trillion Indonesian rupiah. So it is quite big. And government decided to issue all of those programs under what we call the National Economic Recovery Program, or what we call PEN, Program Pemulihan Ekonomi Nasional. That is, it's basically a program that is set for the health, for the social protection, for the business sector incentive, and also for the small medium enterprises. And right now, there are requests for the corporations support. And we are still trying to design the kind of support for the corporation.
Sorry, Pak Suha.
Yes.
If you don't mind, can we take over so we can operate your slide from our end? If that
tolong dong
okay
ini bisa nggak tolong di kontak ini?
Yeah, we can. I think our end has the copy of your presentation, so we can do it.
Yes, please.
Okay, Dodi. Okay, now go to page 17, Dodi.
Yes, one slide after this.
Yes.
So this is the number that I quoted. No, 17.
Yes.
This is a funding for COVID-19. This is all things that we put in the budget. The total number is 686.2 trillion Indonesian rupiah. These are the details. You can look at this later. If we then we put everything, especially for the economic, under what we call the National Economic Recovery Program. Can we go to 2 slides after this?
Slide 19.
Next, yes. So this is what this is the concept. This is a program that we aim to have big impacts, especially for labor-intensive program. For labor-intensive sector, SME, micro and small medium enterprises, government prepared to placement of funds at the banks, and there is a concept of burden sharing between the central bank government and also the banking sector. OJK is basically regulators, and also some of business sector. As you all know, during the crisis, we cannot save everyone. but we do have to save the one that is in good standing and have the ability to contribute for betterment of Indonesia. So basically, if some business sectors already been sick before the COVID, we must be very, very cautious in using the pen money for that. Our programs should be transparent, accountable, and basically when we put them all the money together in the budget will look like the slide in 21. If you go to the slide number 21, you will see that this is the budget for 2020. So the first column is the 2020 budget as we announced last year as the result of the deliberations with the parliament. And then after that, we issue what we call the Perpres 54 2020, which is a result of the Perpu. And in that budget, you will see the budget deficit is set at 5.07% of the GDP. So second line from the bottom, 5.07% of the GDP. An increase from 1.76% as we anticipated last year. There is another column, which is the outlook. Outlook is what we have now after we put in all of the money needed, as I showed you earlier, 686 trillion Indonesian rupiah. So the deficit is widening to 6.34% of the GDP. And if you look at the whole surplus on deficit line, the deficit for Indonesian budget is 1,039 trillion rupiah in 2020. It is a staggering increase from the original budget, which was only 307.2 trillion Indonesian rupiah. So we increased the budget we increased the deficit around 730 trillion rupiah. 686 trillion of which will be for the recovery, for the economic recovery. So this is the kind of budget that we are doing. This is going to be, if you look at the primary balance, if you look at the original budget primary balance was a deficit around 12 trillion. We are very close to zero. And we believe that with the implementation of this 2020 before COVID, we believe that we can wipe out the primary balance in 2020. The deficit in primary balance will become zero in 2020. But with this COVID, it expanded to around 700 trillion rupiah. Unfortunately, we have to make sure that this is financed. And how are we, the rest of my slides actually discuss about the program one by one. But I would like to, I would not go with the programs one by one. Later, if there are questions about particular programs, I'm happy to discuss. But to close my presentation, Pak Aco, Pak Peter, let me pick up what Pak Peter earlier mentioned about the financing. So obviously, financing 1,039 trillion rupiah is quite an effort. How are we going to do that? Number one, Pak Peter and ladies and gentlemen, the government put first priority on our excess cash from past years. So previous years, we have what we call the sisa anggaran lebih. We are using that. We are using the sisa anggaran lebih from previous years. Number two, we are increasing our bilateral and multilateral loans. The typical bilateral multilateral loans is increased right now, quite hefty. Usually we are in the Indonesian budget. Usually we are paying the the loans, Pak Peter. But this time around, we decided that we have to get more loans. So we are increasing the World Bank, AIIB, and also the Asian Development Bank. Number 3, the third priority is that we are going to the market. Still, we are going to the market first. So we are honoring our investors, and we would like to provide the chance for our investors to participate in the economic recovery of Indonesia. And then only after we have already go to the market, Pak Peter, there comes the central bank. As you all know, the central bank, by way of Perpu number 1, is allowed to buy government bonds directly in the primary markets. The central bank right now serves as a standby buyer. If the market cannot fulfill what the government needs from week after week, then central bank will step in and buy directly from the primary market. Right now, we are still discussing with the central bank different other scheme, but I think it will be announced very soon. The additional scheme to addition to that. I understand that from conceptual and theoretical point of view, central bank buying directly from the primary markets of government bonds is sometimes called the debt monetization. That is correct. But right now, the financing of Indonesian COVID is so staggering. And I think all countries are conducting this, if you want to call the direct buying from the primary markets. Basically, our mindset is the following. Whenever because we are facing this COVID-19, the government of Indonesia, the state, is trying to protect the health and trying to protect all Indonesians. Because of the economic slumps, there is no, the tax declined very severely. In order to protect the Indonesians, we are upgrading our health, upgrading the social protection, protect the business sectors and all that. If we have to borrow the money, we will borrow the money. Who actually we are borrowing the money from? We are actually borrowing money from the next generation. This is the next generation who will pay for all actions that we conduct today. But the actions that we conduct today is to save lives, to save life of Indonesians. So the next generation will have to pay. Just like the current generation of Indonesian is still paying some of the debts that we created back in 1998. We are still paying some of them. 140 trillion rupiah is still in the Bank Indonesia's book from 1998 issuance. This is going to happen again now. We will borrow the money. We will protect Indonesian lives. It will, if we are borrowing from the future, the borrowing from the future will go through two books, the government books and the central bank books. So that is basically the mindset at this time. So it is quite a big effort. We will take this responsibility. Nevertheless, we still have to calculate the economic impact and so on. What is the economic impact to the budget? Let me show you the debt to GDP ratio of the government debt. Can we go to the slide that was just shown?
Dodi, can you put it back?
I think it's from my stuff.
From your
Earlier
stuff.
It was shown. I think all of you know that the debt to GDP ratio of Indonesia right now stands around 29-30% of the GDP. Because of this expansion of the deficit, our debt to GDP ratio will increase to around 37% of the GDP. And we will try to hold it steady over there, maybe around 37-38%. Now, if we compare to the post-1998 situation, post-1998, I think you all know that our debt to GDP ratio was around 100%. And then with some fiscal discipline, we were able, Pak Peter earlier mentioned about Pak Budiono and others, with the fiscal discipline that the government put in place, the debt to GDP ratio start to go down until it hits around 25% of the GDP around 2012, 2013. And slightly increased to around 2015, starting 2015, it started to increase to around 30% of the GDP last year. It will increase to around 37 this year. And it will be around 37, 38%. So if we compare to the post-1998, this is manageable. This is actually manageable. We were there, we reduced it with some fiscal discipline. Of course, the question is that post-1998, our fiscal discipline was imposed by the IMF, letter of intent and others. Right now, fiscal discipline, we must impose it on ourselves. And at the Ministry of Finance, we understand this very, very clearly. And we decided that we have to impose self-discipline on ourselves. So that is why, Pak Peter, Pak Ajo, when we put together the Perpu, we put on purposely that the fiscal deficit higher than 3% is only allowed until 2022. By 2023, Indonesia must go back down to below 3% fiscal discipline. That is one way to impose a limit to ourselves. That the higher than 3% is not going to be forever. Indonesia is, we are proud with the fiscal discipline that Indonesia has in the past, and we believe that we can back to that fiscal discipline after this COVID-19 pandemic comes to an end and economic recovery start we can have the economic again, the economic activity again. So let me stop here, Pak Jo. Happy to discuss. If I cannot answer directly, Pak Febrio and Bu Masita will help me answer some questions as well.
Thank you
Back
so
to
much.
You, Pak Jo.
Thank you so much, Pak Sua. Very clear as usual. I understand that Pak Sua might have to run very quickly to another meeting with OJK. So let's just go straight to question and answer. If you have question, you can write down on the Q&A box, but you can also raise your hand, virtual hand. For the first one, let me invite Ross McLeod to ask his question directly. Ross, are you there?
Yes, I am.
Okay, silakan, Pak.
I've written the question in the Q&A box, and I actually wrote this when Pak Peter was speaking, but I think everything that Pak Sua has just been saying kind of backs up the question. I think, as Peter was saying, he was drawing a comparison between the increase in debt to GDP ratio that's going to happen now and kind of implying that it might be similar to what it was back in the AFC. And I'm just wanting to point out that that's just not true. If I've understood what he was saying correctly, the huge increase in government debt that happened during the Asian financial crisis was the direct result of the government's decision to bail out the banking system, and it did that by issuing new issuing new bonds and injecting them into the balance sheets of those banks as an equity contribution. It didn't do a whole lot of borrowing to finance anything other than that. And it seems to me, in the current circumstances, there's nothing similar going to be going on. I don't think anybody's talking about the banking system collapsing and needing to be bailed out. So I think back in 1998, the jump in the debt to GDP ratio was huge, but the corresponding increase now is much smaller. It's only 7 percentage points from 30 up to about 37 or 38. So I just wanted to make that point, basically. Thanks.
Thank you, Ross. I think that's consistent with the presentation from Pak Wakil Menteri. But Peter,
Yes.
do you have comment on that?
No, there's a reasonable degree of agreement between us on this. My only point is that debt in quite a few countries across the world has had an interesting habit of getting away from itself, of rising, and we have in the past found it difficult to cut back. I think the forecasts that Pak Suha and the Indonesian government have provided us with are excellent. They're very useful. We do need to make a distinction, by the way, between government debt and total national debt, so we really need to look at the figures. We're looking to some extent at different figures. The only other point I would make is that during the Asian financial crisis, Indonesia did borrow from the World Bank and from the Asian Development Bank for long-term loans. Part of the loans, most of the loans, as Ross says, were directed to the domestic financial system, but there were long-term borrowings. And I guess I would hope, looking ahead over the next 4 or 5 years, I think it's probably in Indonesia's interests to look at long-term borrowings to support levels of investment in Indonesia. One of the things that I'm worried about is that there was a marked investment slump after the Asian financial crisis. And indeed, the World Bank talks about investment slumps in other countries, and there is concern that the current situation is going to lead to investment slumps. That will have a long-term effect on Indonesia's growth rate, and I'd like to see Indonesia looking at long-term borrowing for development purposes in a quite positive way. I'll leave it at that. That's enough at this stage.
Thank you, Pak Peter. Pak Suha, do you want to briefly comment on that?
I don't quite get I understand that the long term, Pak, yeah. For the long term, I think it's a fiscal discipline that we have to impose. Fiscal consolidation will have to take place very soon, but fiscal consolidation also means increasing tax, increasing the domestic resource mobilization,
right?
And at the same time also making sure that priority spending is imposed, which we are doing it at this time. Right now we are looking at the very detailed level of the budget. What is the component of the government perjalanan dinas? Perjalanan dinas in 2019, and then the amount of perjalanan dinas that we cut down in 2020, and we said that in 2021 we cannot allow that perjalanan dinas to go to the 2019 level. No way. And we are going to impose that to all ministries, because it turns out that I do not need a perjalanan dinas to Canberra to attend the ANU seminar. So that will also be imposed to me as well. But there's a lot of perjalanan dinas that we think that in the last 3 months is not necessary. So many efficiency that we can impose out of this COVID. And Pak Febrio, when he put together the report for the economic macro and fiscal policy for 2021, we would like to make sure that the efficiency gain that we have to use this COVID-19 as a momentum for efficiency. Yeah, because it turns out that we can do that. We issued Perpu from home. We do not. Only a few of us that actually went to the office when we produced the Perpu. We all produced the Perpu from home, and we can do this. We can do this. I'm very optimistic about the Indonesia to the future, but of course we have to handle all the short-term problems. Okay, Pak.
Okay. Thank you, Pak Suha.
I'd like to add a little bit to that, Pak Aco, if I may.
Oh, okay, Pak Febrio, silakan Pak Febrio.
So Pak Suha mentioned about they work on everything of Perpu from home. I was sworn in about 2 months ago, and the first time I saw my actual office was yesterday. So I've been working from home, and everybody's been working from home, and we've produced a lot of stuff. I think this is a good testimony to not only to the government, but also to the whole country, and even to the whole world, that we can actually work as a government much more efficiently by looking at what's important, what's not. And I think continuing on that point though, on that debt to GDP, I think I would like to address a little bit on that as well, because what we're looking at is not really merely about the debt to GDP. Some people might compare Indonesia to some other countries. Some other countries, especially the advanced one, can afford to have debt to GDP ratio up to 100%. Some level says 60% is still safe. We're not looking at that. We're looking at how do we use the debt? Do we need the debt? What can we use that for our GDP growth rate? So we are working on the details of the debt dynamic. Every single year, we keep watching that debt dynamic. Are we actually producing a good GDP growth rate coming from the debt or not? So just for comparison, because I know this is a very academic audience, looking back to 1998, when we had Asian financial crisis, clearly the situation was much different. But if we look at the indicator for debt, for example, one of the good indicators we've been following, is how is the interest payment of the debt relative to government expenditure every single year. The top of that was back in 2001, several years after 1998. That was around 27%. So we use our government spending, almost a third of it, just to pay interest. And clearly when GDP growth rate goes up, especially during the commodity boom, and the peak was 2013, we had the lowest ratio of interest payment to expenditure, around 6.5%. That clearly gave a lot of fiscal space, right? Now, back in 2019, we were at 12.5%. As a result of this COVID-19 handling, we have to accept that this is going to go up slightly, maybe not slightly, jump at least from 12.5 to 17 or 18%. That is going to be a problem. And we have to be ready for that. We have to manage our spending accordingly, like we have done before, to make sure that the debt that we are actually increasing is actually translating into growth. So we keep watching this dynamic of debt, making sure that we actually take advantage of the interest of the global debt market on Indonesian debt. Because clearly we are actually among the highest yield so far, representing, of course, the default risk as well, even though we are at the investment grade. But we have to watch how the sovereign rating agency view our economy. That is reflected in our rating and also reflected in our yield. So we are watching this very closely, because 80% of our debt now is in terms of securities, government securities. So this is now a much different situation compared to 1998, compared to even 2008. We are now we are now being evaluated every single day by the global debt market, by the sovereign rating agencies, by the bondholders. So we have to be careful and we have to be responsible in managing our debt.
Great. Thank you so much, Fabrio. On my list, I have three persons, Sisira Jayasuriya, Peter Ward, and Hal Hill. Sisira wrote, he asked, how will you modify your projected deficit scenario if we cannot control the virus soon? That's Sisira's question, but let's listen to Peter Ward and Hal question also. First, Hal, go ahead.
Okay, hi. Selamat siang kepada kawan-kawan di Jakarta. That's where Fabrio and Bu Masita. Really nice to see you and to listen to you. And I hope you're keeping well and also having a bit of sleep. So I just had two questions or comments, really. First of all, so it's a hopeful story. It's a reassuring story, and nothing like 97, 98, and I guess there's still a trauma of that previous period. I'm actually wondering whether you might even think that the deficit projection is actually very modest. Your debt rising to 37%, the deficit of 6.3% of GDP is actually quite small in such a serious period of time. And it raises the question, I guess it means you've got more fiscal room to move if you need it, but these numbers actually seem quite small given the gravity of the situation. So perhaps a comment or a question if you like. Second one is, if I understand the numbers correctly, most of the increase in the fiscal deficit is actually kind of what you might call an automatic stabilizer. That is, the sharp drop in your revenue is the main element. If I read the numbers correctly, the sharp drop in revenue is actually the main source of the increase in the deficit. There are these increased expenditure allocations, as Pasqua explained, but it looks to me like the revenue decline is actually the biggest part of the deficit increase. Now, so is that correct? And of course, there's nothing wrong with that. It doesn't really matter where the deficit increase comes from, so long as the stimulus is occurring. Again, thank you very much. I really enjoyed the presentation, and it's great to hear you all. Thank you.
Thank you. Let's listen to Peter War. Peter War? Peter, are you still there?
I'm here. I just
okay, silakan. Okay, go ahead, Pak.
Myself, so maybe that's it. Right. Thank you very much to Peter and Sua for that wonderful pair of presentations. Most of the discussion was about finance, very appropriately. Sua mentioned some real side stories that I want to focus on. He mentioned an increase of unemployment of 5 million and an increase in poverty incidence of 4.8. I want to ask a particular question about food security. In many parts of the world, food security is a big worry. Is that the case in Indonesia? Is the government particularly concerned about food security? I guess you can view that as a component of the change in poverty, or an aspect of it. And if so, what are the particular measures that the government is taking to address potential problems of food security? That's it.
Okay, thank you, Peter. Let me turn the microphone to Pak Sua.
Thanks, Pak Jo. Sisira, it's very good to hear from you, or maybe to read your comments. It's a very tough question. If the COVID extends, or how ready? We are ready, Pak Sisira. We are ready. That is what the Perpu 1 is actually granted us. The ability of the government to change the budget in 2020 without having to get the approval of the parliament the usual way. Of course, that doesn't mean we did not go to the parliament. We did go to the parliament. We engaged them, but we do not have to go to the process which we typically call the APBN perubahan, which usually take 1 month. 1 month time for the government to first declare the macroeconomic situation, and then the postures, and then this meeting, that meeting, and all that. We did not have to go through that, so we are ready to adjust the budget. That is what the Perpu is all about. Pak Hal, it's a modest deficit, that is correct. That is actually Pak Hal, if you in the cabinet, there is a very strong argument whether we should go to the higher deficit or not. Even at the the public in Indonesia, topics of debt is a very sensitive and very sexy topic. And of course, we should be able to explain this topic to the general public, but the gesture of the government to make sure that we are doing the debt in the very responsible way is very, very important for most of Indonesia. And that is actually what we are doing. That's why we come up with 5.07% in the beginning. But of course, we did not stop there. We continue to deliberate and discuss about the actual needs. And when the actual needs is actually higher, then we go with a higher credit. If you are talking about what we are doing, it's more like an automatic stabilizer. I think it's true. I think it's true. And part of the discussion at this time, Pak Hal, is that whether Indonesia should go with the quantitative easing or not. And you know that central bank buying the government bonds directly at the primary market at the market rate, it is market. It is not printing money. It is not printing money. It is market. Because the central bank is still buying the government bonds at the market rate, not at any rate. Not like in Singapore, that the central bank is providing 0.01% interest, or in Thailand, way lower compared to the policy rate. In Indonesia, we haven't done that. Now this is also part of the public discussion. If you listen to the Kadin or Apindo, they come up with, oh, Indonesia needs 1,600 trillion. I have no idea where the money comes from, where the number comes from, but then it's an aspirations from the business sectors that the government should come out and then help everyone. And then, as you can see, we are doing it in a very, very cautious manner. And Pak Ros was correct that at this time, the strategy that the government is doing in terms of the helping the economy is not directly a bailout strategy, and that's why it's at this time it's 6.34% of the GDP. Is it enough for Indonesia? Again, it must be balanced with the political aspirations and others, but we'll follow this. We'll follow the development. Pak Peter, it's food security is very high on our discussion at the cabinet meeting for many reasons. But one and foremost is that, as you know, that whenever Indonesia gets into a crisis, it is always the agriculture that is the safety valve. People back to the agriculture, and it is also food that we must secure. And that is why we are, in terms of the Ministry of the Agriculture, right now, we are equipping them with we are basically asking them, what do you need? What do you need for the economic recovery? President the other day came up with the old story of new paddy field, pencetakan sawah baru, which was an old story, but now is reviving again. I think it's true, but probably we did not do it very well in the past. If there is a way that we can do it right now, I think the budget is more than willing to provide money for that. So, but we know that in the past it was not successful. The land is actually clear, but now it's not used, and it's already, pictures of this already been put in even in the cabinet meeting. Pictures of this paddy field from the past, but the potentials are there. So right now, the role of the budget is that many times during the cabinet meeting, the Ministry of Finance, or if I attended the cabinet meeting, the role of the finance is that, what do you need? We will provide the money. We will provide the financing. We will provide the money. So it's a different mode. In the normal time, maybe the mode of Ministry of Finance is that trying to stop people from spending. Right now, we want people to spend. We want people to reallocate, but spend the right one. Spend on the right one. Spend the money on the right one. Right now, Pak Peter, if I look at the implementation of the budget up to the end of May, we are still would like to see the budget absorption to be higher. It's high, it's still higher compared to last year. It is increasing on year-on-year basis, it is still increasing, but it's not increasing very high. But we want the bureaucracy to spend. So this is another challenge in the bureaucracy, and I think a lot of publications already look at the ability to spend by the bureaucracy. I also read another question from Pak Kunchoro from Q&A about what are the merits of choosing the intervention. Right now, Pak Kunchoro, number one intervention is the health. Upgrading all health equipments. 132 hospitals around Indonesia must be upgraded. And then all the health equipments. Number two is the social protection. So in terms of the social protection, the bottom 40 is practically covered. Especially bottom 40% in the rural areas, they are covered. It's covered through the conditional cash transfer by PKH, covered by the Kartu Sembako, which was the new version of the Raskin, previously Rastra. It's covered by the additional of Kartu Sembako from 20 million recipients of Kartu Sembako. Rastra previously was only around 15.5 million or 16 million recipients. Kartu Sembako is 20 million. So they are covered. The one that is not covered is basically in the urban area. You know, a lot of people in the urban area not receiving PKH and Kartu Sembako. These are usually the deciles number 4, 5, 6. So the middle class. So that's why different governments step in with the different other logic on the social protection for this segment. And then after that, for the business sector is the micro, small, and medium enterprises, covering their interest subsidy whenever they have credits to the bank, and covering their we provide guarantee if they would like to borrow more. It's not going to be immediately, they're going to borrow more next month, but we're going to provide the guarantee if they would like to increase their credits. They're probably gonna take place, increasing their credit in 2 months or 3 months time ahead of in the future, which is okay. So let the economy slow down. Quarter 2 going to be the deepest, the lowest, but we hope the quarter 3 going to be some pickup. We really hope that this PSBB transition is not going to create the second wave, so that the economic recovery can be in place. I'll stop there, and Pak Cho, if you like to add other question as well, Pak Febrio masih can also.
Thank you so much, Pak Sua. Thank you for your time and a very clear presentation. All the best for the next meetings. Before I collect other questions, can I go to Ibu Masita if she has something to say? Silakan,
Thank
Masita.
you, Pak Aco. Thank you. Thank you, Pak Peter. A very nice presentation. I think I would like to comment on one of your comments, which is very important, and we've been thinking about it a lot as well, is the probability of investment slump after all of this happening, right? Like after the 97. If you look at Indonesia's economy before COVID, actually, the investment part of the GDP are mostly, triggered by the government investment. In fact, it's mostly infrastructure. So you can imagine with this condition, we were trying to have the private investment crowding in, but not yet, because the plan was to escape the middle income trap by first solving some of the structural issues, including, fixing the infrastructure and logistics costs and, the ease of doing business and stuff like that. Because the private sector couldn't come in, then the government takes the lead, right? But then when it happens, COVID happens to the world. So by the time in the first quarter, one of the low investment growth, I think it's also coming from very low infrastructure development as well. I would like to comment on the yields as well. Why Indonesia yields is really high? Basically, yields consist of two things, right? First, exchange rate risk and also country risk. You can see that if you plot these countries with the current account deficit, there'll be like a negative correlation between current account deficit and yield for sure. But sometimes people question why Philippines even, a lot lower than Indonesia. In fact, if you're looking at the S&P rating, of course, the rating of Indonesia and Philippines mostly similar, but sometimes Philippines is a bit better. But if you're looking at the, composition of capital flows or public debts in Philippines, the number of or proportion of debt made in US dollar, for example, is a lot smaller than Indonesia. So volatility of capital flows during high volatilities like this is better managed than the Indonesia case, because in Indonesia, 38% still owned by the foreign investor. But now, of course, the number is getting smaller, but still, high volatility in the exchange rate is causing, some of this. I think those are the two comments that I think I want to add from Pak Sua and Pak Febrio explanation.
Thank you, Masita. I have a question from
Pak Aco, just a little bit.
Oh, Febrio, silakan, Feb.
Well, ladies and gentlemen, this is how I would like to picture our meeting every day. Almost exactly like what we are doing right here now. We are talking about policies from every angles, including technocratic angles. What we are doing right now, this is exactly a big part of our meeting every day. That we are looking at medium to long term. We're looking at what are actually challenges right in front of our face right now on our table. So we are looking at small and short run decision making process, always in the context of medium to long term. To add a little bit to Masita's point, there is a big and long-term problem of our capital market. Our capital market is one of the shallowest capital market in the world among G20. So it is clearly contributing to the fact that volatility is going to appear all the time, and that volatility has to be priced in somehow into the yield. So that's probably one of good ways to understand why we are facing uncertainty and especially high yield. For example, back in late 2019, before COVID-19 happened, the share of non-resident holding government bonds, Indonesian government bonds, were around 38%. That is one of the highest regionally, maybe even the whole world. And then come COVID-19, suddenly by March 2020, it dropped to 30%. That is how volatile the capital flow is. And now we are looking at a slight increase in the last 1 month by 1 percentage point. And this point is actually very important to us, especially dearly to me, because this is one of the impediments to our stability, to our macroeconomic stability, to our long-term economic growth. If we don't have enough capital flows, deep enough capital market, and relying only on banking sector, this is what we're going to be facing all the time. So we have to have a deeper and deeper capital market, adding more and more financial instruments for people to save their money in, because it's not a secret. A lot of our savings is actually going abroad to other countries, right? I say country, not countries. So that's the problem that we are having, and we need to build on that. If I want to look at medium to long term, that's one of the big agenda, I think, that the Indonesian government needs to think about, how to reach a better financial debt in terms of providing more and more financial securities for people to be able to save their money in, not just in time deposit in banking sector. And that will actually make the capital market become more liquid and can channel actually money to the projects for construction, for economic growth.
Thank you. Thank you, Masita. Thank you, Febrio. Pak Febrio, you are familiar with this survey of recent economic development, of course. And the next one is being written by Susan Olivia. She has a question. I asked her to ask directly, but she has problem with her microphone. So let me read her question. She was asking that why is it that Indonesia not yet among the 90 or so countries to have gone to the IMF facility? And what about Chiang Mai initiative?
Short answer to that is going to be because we don't need it. Because we've had up to this point around $7 to $8 billion committed by several multilateral organizations. And at the moment, we are, again, be careful in terms of using this debt. We are looking at the market. Pak Luki, the Debt Management Office, always looking at what's happening in the market. And back last month, we issued global bonds, and it was well received, one of the longest tenor ever of government bonds, especially for emerging economies. So the market is there, and we are going to combine between market and also support from multilateral organizations. I think the target for this year for multilateral organizations is about 10 to 12 billion US dollars. And the fact that the market's still able to absorb our bonds, that is a good news. But of course, again, we don't want to be too careless here. We know that we are actually working in a scenario of big uncertainty. Again, I don't need to remind you guys all that we never faced such crisis before. All of the crises that we faced, 2008, 1998, we can find it in a textbook. But this type of crisis happened 100 years ago. It doesn't appear in a textbook. We don't have a particular recipe for this kind of crisis. The very particular feature of this crisis now is that we don't know how far it's going to happen. We don't know until the vaccine is actually found. We are going to be operating in the scenario of uncertainty. But regardless, even though we are facing uncertainty, government needs to have a plan. And the plan needs to be always agile and needs to be always ready to be changed. That's what happened in the last 3 months. We came up with the first APBN 2020 and the beginning of the year. And then in April, we came up with a new poster. The deficit was increased from 1.76% to 5.07%. 2 months after that, now we are talking about new poster. Why? Because we're looking at the dynamic in the market. We're looking at the dynamic of economic activity in the real sector. And now we need to come up with new deficit, 6.34. Back to Hal's point, it is true that much of this actually in terms of reallocation. That's actually a good keyword to me, because that means that we are actually reallocating our spending from what we think not gonna be used anyway, plus we increase our efficiency. So much of this funding for our, let's say 600 trillion rupiah of recovery program actually came from reallocation, came from efficiency. Only slightly actually come from additional debt. So at least that is the message that we like to always convey to the market. Again, I have to say that we have to listening to the market, because 80% of our debt is actually financed by debt by government bonds. So hopefully I address Susan's question.
Okay. Thank you, Febrio. Let's take a question from Diandra Pratami from United Nations. Diandra, are you still there?
Hello.
Yeah.
Thank you very much. So I'm Diandra. I'm from the UN Resident Coordinator Office.
Can you speak up a bit? Yeah.
So my question is to Pak Peter McCawley, just asking when you mentioned very little
support or international assistance to Indonesia? Is that also caused by the membership of Indonesia in G20 and also because of the middle income country status? That's basically my question. Thanks.
Okay, thank you. Pak Peter, do you want to address this?
No, I don't think the problem is so much on Indonesia's side. In fact, I think it's my own impression that Indonesia is doing quite well in the current situation, and I think its involvement in things like G20 is very welcome. The real problem, as I see it, is at the international level. For the international community to come together, you nearly always need someone to take a lead. I was pointing way back to the late 1960s when the so-called Intergovernmental Group on Indonesia began, and there was strong leadership from America with strong support from Japan and the World Bank. So there were a number of really quite influential players who came in strongly and said to the rest of the international community, let's support Indonesia. Now, of course, Indonesia, for any international effort now, would not be directed just at Indonesia. It would be directed at the whole of the region, indeed at developing countries. The point I'm making is that unfortunately at present, right now, there is a specific lack of global leadership. Europe is concerned with itself. America has its own problems. It's currently not looking good, but hopefully things will change. Maybe things will change, and that was the other point I wanted to make. That is that it did take time. You know, it did take time. The international community is not a rapid response mechanism, I'm afraid. The international community is often slow, so we do have to hope that something will be done. I mean, looking forward a year or so ahead, if things go well, there will be a vaccine, if things go well, and this will need to be developed, this will need to be shared across many countries, across developing countries, and this will need strong international support. Now that's looking ahead, that's looking well past the next 2 or 3 months, but you know, that's looking towards the end of 2 years. So we do need leadership, and it really has to come at the international level from one of the large nations. So the country that is providing a good deal of leadership around Asia at present is China. But this, of course, is unacceptable to other parts of the international community. So we've got a bad split at the international level. That's really what I was talking about. Terima kasih. Thank you very much. I hope that answers the question.
Thank you, Pak Peter. I think we have time for 2 more questions. Can I ask Juventus and Dandi Rafitrandi from CSIS to ask their questions? Juventus is not up yet. Dandi, go ahead.
Hello.
Yes.
Oh, okay. I'm not expecting to ask question directly. Actually, it's actually related to the previous question, Pak Peter. As countries become more inward-looking right now, well, especially to protect their domestic interests during this pandemic, what are actually the future of the international cooperation? I'm looking for the Indonesia's perspective. For example, G20 and probably RCEP. What is the future of this international cooperation? Thank you.
Thank you. Before we go back, we go to the panelists. Can I ask Chris Manning to speak? Chris, silakan, Pak. Pak Chris, are you still there?
Yeah.
Yes.
Can you hear me, Pak?
Yes, Pak.
Okay. Yeah, my question was about the unemployment. A figure of 5 million was mentioned as the increase in unemployment. Where is the most vulnerable area, and what are the policies what are the main policies to help overcome that? That's on the unemployment. And secondly, how large is underemployment? It's very big in some countries. Australia underemployment is much larger than unemployment in the last quarter. Do we have any sense of what's happening in Indonesia? Thank you, Pat. Very good.
Thank you, Pak Chris. Let's just take the very final question before we answer, and that is from Richard Borsuk. Richard?
Thank you, Arianto. I wanted to ask the people from Ministry of Finance to comment about state-owned enterprises. It seems that some of them need injections or new loans with the COVID situation, quite large amounts, perhaps. Is the Finance Ministry committed, forced in a sense, to supply what is requested by, or guarantee what is requested by SOEs? Thank you.
Thank you, Richard. Can I go first to either Mashita or Fabrio?
Yeah, I can do that.
Yeah.
What was Juventus' question again?
Who?
Juventus.
Juventus is not here.
Okay.
He left already, but Dandi, no, not Dandi, Pak Richard Borsuk asked about injection to SOE, to BUMN.
I'll start with Pak Dandi's question, yeah. Openness versus inward looking.
Mm-hmm.
We are concerned about this. I mean, government knows that the more we are inward looking, the more we are putting more impediment to our growth. Indonesia is among the most close countries in terms of trade per GDP. So we need to work on that clearly. So I agree, we don't want to go always inward looking, especially in the time of crisis. We do want China to grow, because we clearly rely on China, and also the US, Japan, and all of our trading partners, India, Bangladesh, etc. Because with growing together, we can trade and we can actually take advantage of the growth even better. So we do want to go to openness. On Chris's point, unemployment, that has very closely related to the which sectors are actually slowed down the big time. Clearly transportation, clearly trade sector, stores, wholesale. These are clearly affected by a significant decrease in mobility, people mobility. Manufacturing sector, clearly, because some of them are now operating below 70% capacity. So that's what the government is actually looking into, making sure that the unemployment can be contained. Of course, as you guys are following Indonesian economy very closely, especially in the manufacturing sector, it is not easy to fire people. Indonesia has one of the highest costs of firing people, if not number one in the world, right? Yep. So what happened now in the manufacturing sector is that people actually dirumahkan. So they are not PHK, but they're still receiving some part of the salary from their employers. So the way we look at it is the uncertainty about how long this social distancing will have to be in place. Because the longer it is, the PSBB, the longer it is applied, the longer the capacity of the manufacturing sector will be much lower. So we have to come up with the new normal protocol, clearly. And all over the world, we are actually seeing this as well. So we are living in a reality that we can't live in PSBB forever. We have to slightly open the economy, slightly open the activity, increasing the capacity of this manufacturing sector. This will help the unemployment problem. And also government is looking into helping the labor-intensive manufacturing sector, because this is directly helping the unemployment as well. In terms of trade sector, clearly we need to start opening the stores, but clearly that is not going to be easy. Psychologically, people are still afraid. Plus the protocol will be, I don't know, around 50% capacity, because if you go to the mall, it's not allowed to go to 100% capacity anymore, at least for the next several months, I know. And then that will actually limit capacity as well. So clearly unemployment will come from that sector, and we need to pay attention to that as well. Richard's question, SOE. There is a big reform. It's going on, coming from the Ministry of SOEs in Indonesia. The new minister, Pak Erick Thohir, and team. There's also Pak Tiko and also Pak BGS in that ministry. All are reform-minded, and we are Ministry of Finance are happily supporting the reform agendas the Ministry of SOE is actually doing. Some of the SOEs are affected by COVID-19. So that's the priority when we are looking at whether the Ministry of Finance will allocate some investment, some help, but the first priority is not always injecting capital. That is not the all answer, right? In fact, we are actually limiting our capital injection. We are looking at other alternatives, looking at maybe investment, temporary investment, and then they will return the money when the COVID-19 period is over. But there is a big message there is that there is a reform agenda that's been going on in State-owned Enterprises Ministry, and Ministry of Finance is supporting what they're doing in there. Out of these hundreds of SOEs, there are some categories. Some of them are going to be increased in terms of efficiency. Some of them are actually already market leader in their sector, and some of them will be need to be divested. So it's a big task, and we are happy that we have reform-minded people in State-owned Enterprises Ministry. Back to you, Pak.
Thank you, Febrio. Mashita, any addition?
I would like to add a little bit, Pak Aco.
Yeah.
On Pak Chris' question, unfortunately, we don't have like a weekly or bi-weekly survey to gauge the employment and underemployment. But as Pak Febrio said, because a big part of the sectors that were hit by the physical distancing is the, trading services, jasa perdagangan, which takes a big chunk of Indonesia employment, although less formal employment. But if you're looking at employment as a whole, right, the three biggest sectors that absorb biggest employment is agriculture, manufacturing, and then trading services, right? Agricultural are mostly safe. In fact, many people are going back to agricultural. Some of the issues from the Ministry of Agriculture is more on transporting the, the product from agriculture side into the customer, right? But in terms of employment, mostly safe. Of course, expected income will be lower than usual. The second sector is the manufacturing sector. Some of the manufacturing sector was hit by at least two factors. First is the disruption in the global supply chain because of the high import content of Indonesia manufacturing sector. But others also because of physical distancing and lower demand, they cannot make the production. And as Pak Febrio said, because it's so expensive to do the PHK, then I don't see many companies have done layoffs, but zero income is not uncommon. So not even 20% of the income. Zero income is really not uncommon. Unfortunately, I think we need to have a survey on this because this will be a very piece information that we need to have. And the third one is the trading services. Trading services with the PSBB, starting to be lower now, comes more economic activity. We're hoping, even though it's not gonna come back to the pre-COVID era, but at least, it gives some guarantee that people can still have subsistence level of income. So the program that the government is currently doing on the labor-intensive sector is supporting the agriculture. First, because 80% to 90% of agriculture employment are non-formal. The help cannot be through injection or working capital loan. And this sector doesn't need it this year as well. The necessary help from the government that is needed is in the form of bansos, direct cash transfers to program Keluarga Harapan, for example, and then the food bansos, right? For the manufacturing sector, the labor intensive, we have restructuring their loan And also the government, what Pak Sua mentioned earlier, is going to announce some of the support in terms of the working capital loan for this manufacturing sector, which, the employment account more than 20% of total employment in Indonesia. And then the third one, trading sectors. We haven't talked about giving direct working capital loans for two reasons. First, trading sectors have a lot of non-formal as well, similar with agriculture, but with less proportion. So the policy that is really needed is also cash transfer for the people working on the sector. But with the PSBB winding down, we think this sector is going to improve. In fact, if you still have physical distancing, even if you give working capital to trading services sectors, it's not going to move because there's no demand for these sectors, right? So for the three major sectors, Indonesia relatively already have, some kind of policies in place to help at least not give a stimulus in terms of giving higher growth, but more, this year we are playing defensive scenario. So we're making sure that the health, safety, and the minimum basic income of Indonesian are well covered. And then hopefully, if we don't have a second wave, like many people are talking about in the world, then we are going to start with the real stimulus, meaning to start, fast forward the economy next year. I think that's all my addition, Pak Aco.
Thank you so much, Masita. That's a very nice summary. So we can conclude there because we're already also 10 minutes past our time. So let me thank again all the speakers, Pak Peter McCawley, Pak Wakil Menteri, Pak Suahasil Nazara, and also Pak Febrio and Ibu Masita. Thank you everyone for attending this seminar. As usual, sorry we cannot address every single question completely. So let me turn this over back to Nuke to close.
Hi, Aco. Thank you. I just want to announce for next week's seminar. Next week's seminar will be, we'll have Irma Hidayana from Lapor COVID-19 and Zulfikar Amin from Nanyang Technological University. And we will talk about, are we ready for the new normal? So this will talk about their latest survey on the residents of Jakarta about the new normal. So we'll see you next week. And the materials from today's presentation should be up tomorrow at our website, www.covid19indonesia.net. Thanks.
Thank you, everyone. Thank you.
Thank you, everyone.
Pak Sua masih.